let's understand the impact on individual players. And to discuss that and more, I'm now joined by Bhavin Patel, the co-founder and CEO of LenDenClub. Thank you very much, Mr. Patel, for joining us this evening. Now, RBI has been communicating these issues in the past as well, and now has issued a set of revised guidelines. Take us through the kind of implications that you as a company are facing, and what kind of gaps are these new rules really plugging?
Yeah, sure, Sumita. So this new set of regulations were already in making for last one and a half year. The Reserve Bank of India has been advising different P2P platforms in terms of what are the gaps as well as what are the good things are done by those P2P lending platforms. Many of the gaps were already filled in, which has now come up in terms of regulations. So as far as we as a company is concerned, out of 10-11 points which has now come up in terms of new guidelines, we are already compliant on majority of them except one point, which is related to the payment side. On the payment side, again, previous regulations were also having dedicated lender's bank account as well as borrower's bank account. Now the cross transaction of those bank accounts have been prohibited. So according to that, we'll have to adjust our platforms. But barring that, there is no major impact as such.
Right. So as my colleague was mentioning, that lenders might be facing potential cash flow disruptions. Do you really expect the profitability of these companies to get impacted? And what about your own?
So at the industry level, there will be few platforms where the cash flow disruption might be there. However, I would say it is just a cash flow disruption and not the default by these P2P lenders. Whatever borrowers are supposed to pay, they will pay as per the EMI schedules, and that money will be routed through their respective lenders. So as far as what I can read from the industry, I do not expect any major accident on this point. It's just a disruption in the cash flow, and that is very well coined by Anurag. Also, from the very first day when the first set of regulation came up in 2017, it already envisaged the two escrow account mechanism, and all the money which is supposed to come from the borrower are properly managed. So nothing to be worried about the P2P lenders who have lent money through the platforms. As far as the income part is concerned, I think we'll have to wait for a couple of months to see how the new set of regulations are being settled. What are the changes coming up? As far as I can understand for our platform, it may have a temporarily change in the flow of users for next couple of months before settling down. So you can expect at the industry level also there will be slowdown in the income, but in a longer run, this will be helpful to the industry and the customers which are coming to P2P lending platforms.
Right, and of course, essentially the aim is to clean up the ecosystem to ensure that there is transparency is what the central bank is really attempting at. In fact, what we're also learning from our sources is that some lenders have already stopped withdrawals and investments. What other impact do you really see some of the companies in the sector facing? You're saying that you're not facing any big impact as a result of these guidelines because you were already compliant. But what is the overall industry impact that you're expecting to see?
At the industry level, as Anurag also rightly coined, that there will be cash flow disruption because there was a secondary market where the trading of the loan used to happen between a lender to lender, which is now stopped as per the new set of regulation. So time being, that will create a cash flow disruption and that will have a larger impact at the overall industry. However, the second biggest impact which we are envisaging is in terms of T+1 guideline, which now the regulator has said for managing money flow coming from the lenders and borrowers. So I think that is also a little bit harsher in terms of managing the T+1 timelines. If we look at the overall capital market or the financial market, the T+2, T+3 are general timelines. Even in case of payment gateway, it is T+2 and T+3 because you have to reconcile the money, you have to ensure who has transferred it, and accordingly you process the money. So I think that is the second largest impact which will happen at the industry level.
Right, and overall the move really impacts lenders who relied on quick liquidity. But last question, Mr. Patel, how do you really think that this move will impact bank deposits? Because many are saying that they are likely to go up. Do you see that happening?
Sumita, as far as the size of our sector is concerned, we are 0.00001% of what bank has in terms of deposit. So I do not see bank as a competitor or this will benefit bank in any terms. I think we should look at P2P lending in a separate framework that this can help achievement of financial inclusion target of the government as well as Reserve Bank of India, because the kind of product P2P lenders have come up with, the kind of borrowers we have helped. We made a survey at the association level and we came to realize that we have touched around 2.5 crore lives in India, which is almost 2% of our population, and which we believe that at such a small sector size, we have touched 2% of Indian population, which is much larger. To the point, we are not harming banks or small finance bank in any ways, because we are a very small young kid on the block which is trying to innovate through technology and not snatching away customers from either of them.
All right, so you're saying that it will not have any impact as far as bank deposits are concerned. You're saying that you are a smaller player, but definitely more impactful as well on that note. Thank you very much, Mr. Patel, for weighing in on this very, very crucial issue, this new policy and new norms as far as the peer-to-peer lending industry is concerned. The RBI is looking at promoting transparency. It is looking at promoting compliance as well as far as this overall sector is concerned. In fact, some of the lenders, like my colleague was stating, that they have halted withdrawals and investments. We'll have to see how the overall impact plays out over the next couple of months.
If you like this video, then like, share and subscribe to ET Now.